Welcome back to Let's Talk Forex. I'm Alison and I'm here with my co-host Chris. And today we're going to talk about the fundamentals of trading, or something that is very crucial to understand, especially as a beginner trader. We're going to be talking about win rates and risk-reward ratios. And we're going to be showing you why understanding these numbers and calculating these numbers during your trading and journaling them is so important to your trading strategy. Hey Chris, how's it going?
I'm cold, Alison. I'm cold. Winter is here in Portugal. It's 6 degrees outside. Not pleasant. Unpleasant. That's why I left London. Is to not be cold.
But to be fair, you only get it 2 weeks of the year. Isn't that true?
This is true. It's not, but still, right now in this moment, that doesn't help me much. It's still cold.
No, sorry.
That's all right.
And you went for a run this morning, which was very impressive.
Yeah, went for a run in the cold. I used to go running when it was negative in London, -2, -5. The problem with that is you've got to be careful slipping on the ice.
Do you have like special running shoes in London that you use?
Yeah, well, when you're running, when it's like that, yeah, you put some cleats on your shoes so you don't slip in the ice. But yeah, so it's not that bad. So I can't complain too much. But right now in this moment, I'm feeling chilly. How are you, Alison?
Yeah, no, I must say I'm feeling quite hot today.
Of course you are.
Yeah.
Oh.
It's beautiful here, like 26 degrees, I think. Yeah, so summer continues.
Yeah. Oh, good for you guys. But yeah, today we're talking about win rates and risk-reward ratios, which, as you said there at the top, is a really critical aspect of trading. Whether you're just starting out or you've been in the game for a while and you're refining your approach, you really need to understand win rates and risk-reward ratios. These are critical. It's not just about making trades, it's about making smart, calculated trades. It should be an integral part of your trading plan. So we're going to break it down today and talk about the ins and outs of this and how to incorporate it into a trading plan.
Yeah, so I guess if we start out with win rates, we just want to start with the basics here. So I'm going to throw it back to you, Chris. What is a win rate and why is it important?
So, yeah, it's pretty simple. Your win rate is essentially how successful you are as a trader. How often do you make a profit? So it tells you the percentage of the trades you win out of all the trades that you make in total. So if you make 100 trades and you win 60 of them, then your win rate is 60%. It's pretty basic. But why does this matter? So your win rate helps you understand how often your strategy is working. A higher win rate means more successful trades, means obviously you're going to lead to, well, not all the time, but often will lead to greater profits. But yeah, and this is something we're going to go into is why a high win rate alone will not guarantee greater profitability.
Yeah, exactly. You've also got to look at your risk-reward ratio. So these two in combination will actually determine, how profitable you are. But we're going to discuss this more a little bit later. I guess what a lot of traders probably are thinking is, what is a good win rate? What's a benchmark?
Right. Yeah, exactly. It's good. It's a good question. So a win rate of around 75% is considered very strong. And I don't think, especially a lot of beginners probably shouldn't aim that high. Some strategies can work really well with the low win rate. And I know some traders will aim for somewhere in the 60s, between 60 and 65% with a good strategy. And it's about pairing it with the right risk reward ratio here.
Yeah, exactly. It's about a balance between the two. And for beginners, if you've got to track your win rate to check whether your strategy is viable or not. I think it's a very good way to determine that. So if you are trying to figure out whether a strategy is working, you've obviously got to give it some time, but tracking your win rate is quite a good way to see the viability of that strategy.
Yeah, absolutely. 100%. And then, so now, yeah, let's get into the risk reward ratio. Do you want to break it down for us, Alison?
Yeah. Okay, so it's something I talk about a lot in my videos, and it basically compares your potential loss to your potential profit on a trade. And you calculate it using your entry, obviously where you enter the trade, where you set your stop loss, and then, of course, where you set your take profit. And it's the balance of where you set your stop loss compared to where you set your take profit that determines that ratio. So for example, say that you enter a trade at $100 and you set a target price of 110 and a stop loss at $95. Your potential reward is $10 because it's 110 minus 100 gives you 10. And your potential risk is $5 because 100 minus 95 is 5, of course. So here, obviously, you've got a risk reward ratio of 1 to 2, meaning you risk $1 for every $2 you stand to make. And that's the basic of risk and reward.
Yeah, and that's really important to get this right, because it ensures your winning trades are going to be large enough to cover your losing trades. So even if your win rate is only 50%, which is quite low, but with a 2-to-1 ratio, you'll still be able to cover your losses. You'll still be profitable over time.
Yeah, exactly. It just gives you more potential, for to be profitable. So that's how they work together. And I'll put together a table. Well, I'll put a link to a table which will show you that exact balance and how the risk reward ratio works together with your win rate, and how with the lower win rate you can still be profitable with a good risk to reward ratio. I think we've also done a video on that. Quite a long time ago, but I'll put a link to that in the notes. So I guess, Chris, do you want to jump into how these two metrics work together?
Yeah, exactly. It's all about the trade-off. As we've talked about here, it's about the balance. So if you have a high win rate, like we said, maybe 75% or something like that, you can afford a lower risk reward ratio. So something like 1.5 to 1, because obviously you're winning a lot more than you're losing. So you don't need to have that, reward. But if your win rate is lower, like we said, maybe 50%, then you're going to need a higher risk reward ratio, really. Is what you're going to be looking at, something more like 3 to 1, in order to make any decent profits.
Exactly. So it's basically a balance of the two, or a seesaw. And the key is basically that you have to know your own numbers. So that's where we get to journaling and tracking your trades.
Yeah, exactly. If you're a beginner, so obviously we always say you want to start with a demo account or paper trading, or whatever you want to call it. This means with a demo account, you're trading with virtual money. You're not trading with your own funds. And this is really important for testing your strategy, especially when we're talking about the risk reward ratio and your win rate. So once you've got a paper trading account and you're testing out the strategy, you want to track every trade that you make in a journal. And this means you want to record your entry, you want to record your stop loss, you want to record your target and your win rate, and your risk reward ratio in there. And over time, you're going to see with this journaling process, you'll see patterns, and you're going to learn what works for you, and you're going to find that balance that works with your trading strategy.
Yeah, and this step is crucial. I mean, I think it's something we emphasize a lot. It's testing your strategy on an account that you can't lose any money, or if you are testing it on a real account, using very small position sizes. And you basically want to think of it as doing your homework before you get to the big test, where you're going to actually risk your money, of course.
Yeah. Yeah, absolutely. 100%. And then, for more experienced traders, also recommend taking things a step further by factoring probabilities. So this involves estimating the likelihood of a trade hitting its target versus hitting the stop loss. It's probably not something for beginners to jump straight into, but if you've been trading and you're aware of the topics we're talking about, I think it's a really good idea to incorporate it into your plan.
Yeah. So, for example, if your trade setup historically has a 60% win rate, you'd assign 60% probability of success, and then you can calculate the expected value of a trade, and you can assess its potential profitability.
Yeah, exactly. It's a more complex approach, but once you've mastered the basics, it can really give you an edge. And so it's definitely something more experienced traders should look into.
Great. Well, I guess that kind of, sums up really what this is about, what a win rate and risk reward ratio are about, and why they're so important. And I just want to summarize the key points, especially if you're taking notes. So firstly, you want to know your win rate. And this will obviously tell you how well your strategy works. And you want to aim for a benchmark that fits your trading style. As you mentioned, Chris, a lot of traders say that if you've got a 75% win rate, you've got a very strong win rate. But you can even win with or be profitable with a win rate of 50%. Then secondly, you want to understand your risk to reward ratio. So you want to ensure that the potential rewards outweigh your potential risks. And this is especially important if your win rate is low. Then you want to balance the two. So as I said, you need to balance your risk-reward ratio based on how your win rate is going. Obviously, as I said now, a lower win rate means a higher risk-to-reward ratio, and vice versa. And then you need to track everything. Make sure that you have a journal. And as you said just now, Chris, track your entries, your stop losses, your take profits, the win rates, and your profitability on the trades. And of course, start small. Always start with a demo account. Try your strategy out. Once you're comfortable with your strategy, that you see it has a decent win rate, and you've adjusted your risk-reward ratio, then move on to a small account and slowly grow or scale up from there.
Yeah, absolutely. And yeah, like you say there, I mean, trading is a marathon, Alison. It's not a sprint. So don't try and bite it off more than you can chew. And take your time, learn this, track your numbers, refine your strategy. If you're not fully comfortable with trading in a live environment yet, then stay in the demo account environment. If you're not happy with your strategy. So yeah, take your time. This is really important. I think this is a really important podcast we're doing here, because it's if you're going to be a successful trader, you need to get this and take the time to make sure you understand it fully.
Well, thank you so much for tuning in. If you like this podcast, please share it with friends, and remember to subscribe and like our channel. And we'll see you in the next podcast.
Absolutely. Happy trading, Alison. We'll see you next time.
Cheers, Chris.